Imagine sitting in a room with Warren Buffett as he makes his next bold move. The Oracle of Omaha just bet over $500 million on 3 stocks: Occidental Petroleum, Sirius XM, and Verisign. But why these 3? What secret signal in the market made him act now? What does Buffett see that the rest of us might be missing? In the next few minutes, we're going to explore Buffett's strategy and uncover the reasons behind his sudden return to buying stocks. You'll discover how his moves could reshape the investment landscape for investors like you and me. Picture this: Warren Buffett, the legendary investor, sitting on a mountain of cash, watching the stock market from the sidelines. It's an unusual sight, isn't it? For months, the Oracle of Omaha has been uncharacteristically quiet, leading many to wonder what's going on in that brilliant financial mind of his. So why was Buffett, known for his savvy investment moves, suddenly so hesitant to jump into the market? Let's break it down. Buffett's approach has always been about patience and value. He's not one to rush into investments just because everyone else is doing it. His recent inactivity stood in stark contrast to the broader market enthusiasm. While many investors were excitedly buying stocks during a bullish phase, Buffett was taking a step back, carefully analyzing the situation. Economic factors played a big role in his decision-making process. Rising inflation and fluctuating interest rates created an uncertain market environment. For example, high inflation was driving up costs for companies across industries, potentially squeezing profit margins. This uncertainty led Buffett to adopt a more cautious stance, preferring to wait for more favorable opportunities. Berkshire Hathaway, Buffett's company, was sitting on a massive $147 billion cash reserve, giving him the luxury of patience. Like a chess master setting up the board, Buffett could afford to wait for the perfect moment to strike, rather than rushing into investments that didn't meet his strict criteria. This patience wasn't accidental. It was a calculated move in response to market conditions. Buffett's investment philosophy has always centered on value investing, looking for undervalued companies with strong fundamentals. In a market that many considered overvalued, his reluctance to invest aligned perfectly with his tried and true strategy. While Buffett was patiently waiting on the sidelines, the economic landscape was shifting. The recent environment, characterized by strong demand and limited supply, started creating favorable conditions in certain sectors. One area that caught Buffett's attention? Oil and gas. This development is crucial because it hints at what might have prompted Buffett to reconsider his investment stance. The energy sector, which had been out of favor for a while, suddenly started showing signs of value that aligned with his investment criteria. As we watched and waited, the first signs of Buffett's renewed interest in the market began to emerge. His moves are calculated, based on years of experience and a deep understanding of market dynamics. The key is recognizing that Buffett's return to active investing isn't just about timing. It's about seeing value where others might not. In the investment world, cash that's not being put to work is often seen as a drag on returns. So Buffett was in a tricky position, balancing the need for caution with the pressure to find profitable ways to use that mountain of cash. This balance is what makes Buffett's strategy so intriguing and worth studying. While many investors were fleeing from fossil fuels, Warren Buffett was diving in head first. What does the Oracle of Omaha see in Occidental Petroleum that others are missing? Let's unpack the strategy behind his biggest energy bet yet. Occidental Petroleum has become Buffett's crown jewel in the energy sector, with his stake now exceeding 28% of the company. This massive investment suggests he sees something extraordinary in his oil giant, even as the world increasingly focuses on renewable energy. At the heart of Occidental's appeal is its stronghold in the Permian Basin, the cheapest source of oil and natural gas in the United States. This prime location gives Occidental a significant competitive edge. Imagine owning a golden lottery ticket in the energy sector. That's what the Permian Basin represents for Occidental. Occidental's financial performance has been impressive, generating over $4 billion in free cash flow in the most recent quarter. This cash-generating machine allows the company to invest in growth, reduce debt, and return value to shareholders, all key factors in Buffett's investment strategy. Buffett's admiration for Occidental's CEO, Vicki Hollub, adds another layer to this investment story. He's called her a fantastic manager who focuses on shareholder value. Hollow's leadership aligns perfectly with Occidental's strategic direction, positioning the company to navigate the evolving energy landscape. Despite challenges like a mild winter and pipeline disruptions, Occidental has shown resilience. The company's strong production levels resulted in better-than-expected third-quarter results, demonstrating its ability to adapt and thrive in adverse conditions. Looking ahead, Occidental has exciting prospects. The company anticipates $300 million to $400 million in annual cost savings starting in 2025, thanks to reductions in transport prices. Additionally, its chemicals business is set to add another $300 million to $400 million in EBITDA once the overhaul of its Battleground chemical plant in Texas is completed. This diversification provides an additional revenue stream and helps insulate the company from oil price volatility. The current market environment has created favorable conditions for producers like Occidental, with strong demand and limited supply leading to higher prices and increased profitability. While this situation may not last forever, it provides Occidental with an opportunity to strengthen its financial position and invest in future growth. Buffett's long-term vision for Occidental likely extends beyond traditional oil and gas. The company's expertise in carbon capture and storage technologies could position it as a key player in the transition to a lower carbon future. By leveraging its current strengths, Occidental could become a leader in the evolving energy landscape, making Buffett's investment a strategic play for the future of energy. Picture this. You're on a road trip, and every car around you is its own personal radio station, broadcasting unique content to the world. That's the future Buffett envisions with his investment in Sirius XM. This satellite radio giant isn't just another audio service. It's a potential game-changer in the world of entertainment. Sirius XM has carved out a unique niche in the audio market, offering diverse programming that sets it apart from both traditional radio and streaming services. What really catches Buffett's eye is the company's subscription-based model. This steady income stream reduces reliance on volatile advertising markets, aligning perfectly with Buffett's risk management philosophy. It's like having a reliable engine in a changing economic landscape. The numbers tell an impressive story. Sirius XM is projected to reach 50 million subscribers by 2025, up from its current 39 million. But it's not just about listener count, it's about value. The company expects to generate $8.5 billion in revenue and $2.6 billion in EBITDA by 2025. While this represents a slight decline, there is a silver lining: strong free cash flow conversion, potentially reaching $1.8 billion in the long term. This financial stability is crucial for future growth and investments. So how does Sirius XM plan to stay relevant in the era of Spotify and Apple Music? The answer lies in its unique content strategy. The company is aggressively pursuing exclusive deals and original programming, creating a comprehensive audio experience you can't find elsewhere. This approach helps differentiate Sirius XM and keeps subscribers tuning in. Just as a well-tuned engine propels a car forward, Sirius XM's evolving technology is set to drive its future success. The company is leveraging its app offerings to compete with streaming alternatives, potentially attracting new subscribers and enhancing its market position, especially among younger listeners who crave on-demand content. Another factor that could supercharge SiriusXM's growth is the rise of connected cars. As more vehicles roll off production lines with built-in satellite radio capabilities, SiriusXM's potential subscriber base expands. This could lead to a significant surge in subscriber numbers in the coming years. Buffett's investment suggests he sees SiriusXM as more than just a radio company. He envisions it as a key player in the future of audio content delivery. With its loyal customer base, diverse programming, and unique technological infrastructure, SiriusXM is well positioned to navigate the challenges and opportunities of the evolving audio industry. As we look to the future, questions arise. How might SiriusXM adapt to stay relevant in a constantly changing audio landscape? Could we see the company expanding into new content formats, or leveraging its satellite technology for purposes beyond entertainment. One thing's for sure, Buffett's bet on Sirius XM is a signal that the future of audio is full of exciting possibilities. While Sirius XM shapes the future of audio, Buffett's next move targets the very foundation of our digital world. Did you know there's a company that acts as the unsung locksmith of the internet? Verisign might not be a household name, but it's the silent guardian of the online realm as we know it. This tech giant operates the .com and .net top-level domains, making it a critical player in the internet ecosystem. Imagine controlling the gateways to countless online businesses and personal websites. That's the power Verisign wields every day. But why would Warren Buffett, known for his preference for easy-to-understand businesses, invest in such a technical company? The answer lies in Verisign's rock-solid business model and its crucial role in maintaining the internet's infrastructure. Unlike flashy tech startups that grab headlines, Verisign works behind the scenes, ensuring that when you type a web address, you end up exactly where you intended. Every time you visit a .com or .net website, you're interacting with Verisign services. Despite the growing number of competing top-level domains, .com and .net remain the most popular choices for establishing an online presence. This dominance strengthens Verisign's market position and creates a moat that even Buffett can appreciate. Verisign's contracts with ICANN, the organization responsible for coordinating the Internet's naming system, allow for steady price increases. This pricing power, combined with Verisign's long-standing contracts since 2000, creates a reliable revenue stream that's rare in the tech world. Let's talk numbers. Verisign's shares currently trade for about 23 times analyst consensus earnings estimate for 2025. While this might not seem like a bargain at first glance, it's important to consider the company's slow and steady revenue growth over time. In a tech landscape often marked by volatility, this kind of reliability is a valuable asset for investors. As our lives become increasingly digital, the importance of secure and reliable online infrastructure continues to grow. Cybersecurity is becoming a critical concern for businesses and individuals alike. Verisign's expertise in maintaining secure systems positions it well to capitalize on this trend. Imagine a future where every device in your home is connected to the internet. From your refrigerator to your doorbell, the Internet of Things, IoT, is set to revolutionize how we live and work. Verisign is already exploring opportunities in this space, which could open up new avenues for growth. Buffett likely sees Verisign as a cornerstone of the Internet's future. As our reliance on digital infrastructure grows, so does the value of a company that can ensure its reliability and security. Verisign's strong market position, combined with its potential for expansion into new technologies, makes it a compelling investment for those looking to capitalize on the continued growth of the digital world. Imagine an orchestra where an oil drum, a radio, and a computer keyboard come together to create an unexpected harmony. That's the essence of Warren Buffett's latest investments in Occidental Petroleum, Sirius XM, and Verisign. These seemingly unrelated companies form a symphony of long-term value in Buffett's world. But what's the melody behind this unconventional composition? While many investors chase after flashy tech stocks and rapid growth, Buffett is playing a different tune altogether. His focus? Strong market positions, substantial cash flows, and potential for sustained growth. It's a strategy that's paid off before, and Buffett's betting on it again with companies that may have been overlooked or undervalued. Take Occidental Petroleum. While others see an oil company facing challenges from renewable energy, Buffett sees a key player in the transition to a lower carbon future. Sirius XM? It's evolving beyond traditional radio into a multi-platform audio content provider. And Verisign is exploring opportunities in the Internet of Things space. But why these companies, and why now? The key lies in Buffett's unwavering focus on fundamentals. He's not swayed by market hype or short-term trends. Instead, he looks for solid financials, strong market positions, and long-term growth potential. It's a reminder that sometimes the best opportunities lie in areas others are overlooking. This approach isn't without risks, of course. The oil industry faces challenges from the shift towards renewable energy, The radio business is contending with fierce competition from streaming services, and the internet infrastructure sector could be disrupted by new technologies. But Buffett, true to form, appears to be playing the long game. Buffett's moves often signal confidence in undervalued sectors, potentially influencing broader market sentiment. For Berkshire Hathaway, these investments could provide steady cash flow and appreciate in value over time, contributing to continued success. So what can we learn from Buffett's strategy? First, focus on fundamentals. Don't get caught up in the latest market frenzy. Second, think independently. Sometimes the crowd isn't always right. And finally, be patient. Buffett's not looking for quick gains, but positioning for long-term success. Looking at these investments, we can make some educated guesses about Buffett's next move. He seems to be favoring companies with strong market positions in industries that are essential to our daily lives. He's also throwing a preference for businesses that generate substantial cash flow and have the potential to adapt to future challenges. As we watch Buffett's unconventional orchestra play out, remember, in investing, as in music, sometimes the most beautiful melodies come from unexpected combinations. The question is, are you listening closely enough to hear the tune? While Warren Buffett's recent stock purchases have made waves, successful investing isn't about blindly following the Oracle of Omaha. The real lesson is the power of patience and a long-term perspective. Buffett's return to buying stocks signals a shift, but his unwavering focus on fundamentals truly sets him apart. Did you know that trading surged by 300% in 2020? This contrasts sharply with Buffett's patient approach. The key is seeking value where others don't and thinking in years, not days. Can you afford to ignore long-term vision in your portfolio? Building wealth is like planting a tree. It grows slowly but steadily over decades. Are you ready to embrace patience and fundamentals? The market will always fluctuate, but by maintaining a long-term perspective, you can navigate investing with confidence.